Hey, thanks for viewing this video. This is number 2, so check out my other videos if you're new to trading and want a little bit of advice. After you've determined how you're going to trade, it's a good idea to select what you're going to trade. I'd suggest getting into high volume assets like the major ETFs, or if you're a little bit confident and more curious, I'd say get into options for those same ETFs. I've never personally had any issues entering or exiting my position using an ETF, so I can only imagine that it's not fun, when you want to cash your position and you can't because there's no one willing to buy. So check out the ETFs like IWM, Triple Q, SPY, those sorts of things. And if you don't know what an ETF is, let's do a quick check of Investopedia, which says an ETF is a pooled investment vehicle similar to a mutual fund that offers investors a proportionate share in a pool of stocks, bonds, commodities, and or other assets. So the thing that kind of differentiates, I'll just continue that, the thing that kind of differentiates ETFs from mutual funds is that ETFs are traded intraday, whereas mutual funds are traded at the end of the day. So just a little bit of tidbit of information. But anyway, I mentioned the IWM and some others, and the IWM tracks the Russell 2K, which is heavy in small cap companies stocks, so companies worth less than a certain amount of money. And then the Triple Q tracks the NASDAQ. Everybody knows the NASDAQ, right? The NASDAQ is heavy, of course, in your tech stocks, so Amazon, Google, Facebook, those things. And DIA tracks the Dow Jones, which is heavy in your blue chip stocks. And I think that's major companies that are, have your everyday worker, blue collar worker, like Walmart, Target, Johnson & Johnson, and some steel toe hard hat type companies, those times. And then the SPY is tracking the S&P 500, which of course is heavy in financials. I'll try to link a video specifically talking about the SPY, but it doesn't exist yet, so I'll try to remember that later. But yeah, keep these ETFs in mind and also others, and check sites like ETF.com that can give you a little bit more detailed information on the ETFs that you're trying to trade, because there's so many out there. There's multiple ETFs which track the same indice and they track it in different ways, so be careful about that kind of thing. And then there's things like the SDS, which track the inverse of or basically a short of an indice. So I wouldn't advise getting into shorting anything until you're comfortable trading regularly. But yeah, check out ETFs if you don't know what to trade. Hopefully this will help you out, especially if you're going to be utilizing some of the strategies that I'll be discussing in some of my later videos.